Welcome back to Explain the Charts, everyone. Today, September 12th, 2025, we're taking an in-depth look at the NZDUSD pair, which is currently making headlines by climbing to a near one-month high. Let's start by understanding the recent news and economic events driving this movement before we dive into the technicals of the chart. The primary catalyst for NZDUSD's ascent is a noticeable weakening of the US dollar, largely a reaction to the latest US Consumer Price Index data. Headline CPI for August rose 0.4% month-over-month and 2.9% annually, slightly above consensus, but core CPI figures were aligned with expectations. Despite the slight headline increase, the market's interpretation is dovish, solidifying expectations for a 25 basis point rate cut from the Federal Reserve at their upcoming meeting, with traders nearly unanimous on this outcome. Further compounding the dollar's weakness was a significant surge in U.S. initial jobless claims to 263,000, the highest since 2021, signaling potential softening in the labor market. On the New Zealand side, RBNZ Governor Hawkesby recently indicated that the official cash rate could fall towards 2.5% by year-end, following a more dovish-than-expected rate cut at their last meeting. This suggests that while US dollar weakness is currently propelling NZDUSD, the RBNZ's dovish stance might cap sustained upward momentum for the Kiwi in the long term, depending on the pace of easing. Now, let's examine the daily chart to see how these fundamental factors translate into price action. Looking at the one-day chart, we can clearly see the strong upward momentum that has pushed NZDUSD to its recent highs. The pair has broken above a crucial 100-day moving average around 0.59597, a level that previously acted as resistance, as noted by TradingView. This break is a significant technical signal, indicating a shift in short-term sentiment. Observe the strong green candles and increased volume during this recent rally, reinforcing the conviction behind the move. The price briefly stalled at what Investing Live referred to as a major trendline, which appears to be in the vicinity of the 0.5970s, before pushing higher. Switching to the one-hour chart, we can analyze the more granular price movements that led to today's strength. The rapid ascent from yesterday's lows is evident, driven primarily by the post-CPI US dollar selling. We can see a clear bullish trend with higher highs and higher lows forming over the past few hours. A minor support zone was identified around the 0.5920 level on the 4-hour chart, and if we look closer, price did find some temporary footing there before continuing its climb. The current price action shows the pair trading near 0.5977, testing previous resistance levels. Let's zoom into the 15-minute chart to catch the very latest action and pinpoint immediate trading opportunities. Here, we can observe the breakout above the counter-trend line around 0.5950, which encouraged buyers to pile in for further gains. The rapid candle formations after the U.S. data releases show high volatility and strong directional bias. The ability of the price to sustain above 0.5950 indicates strong short-term buying pressure. Traders should watch for continued bullish momentum if this level holds as support. Conversely, a decisive break below 0.5950 on this time frame could signal a short-term reversal or consolidation. The price is consolidating near the top of its recent range, suggesting either a pause before further gains or a potential exhaustion of buying pressure. Now, let's tie everything together with our bullish and bearish outlooks. For a bullish short-term outlook on NZDUSD, the primary driver remains the weakening US dollar. If the Federal Reserve indeed cuts rates by 25 basis points next week, as markets widely expect, and potentially signals further dovishness, the dollar could continue to depreciate, pushing NZDUSD higher. A strong print from New Zealand's Business NZ Manufacturing PMI, due later today, would also reinforce bullish sentiment, as a reading above 50 signifies expansion and is bullish for the NZD. The break above the 100-day moving average and the counter-trend line on lower timeframes further supports a bullish continuation, targeting the 0.6050 resistance level. On the other hand, a bearish short-term scenario could unfold if the US dollar's bearish positioning is, as some suggest, overstretched. If upcoming U.S. economic reports, like the University of Michigan surveys, surprise on the strong side, or if the Fed adopts a less dovish tone than anticipated for future cuts, the dollar could find renewed strength. The RBNZ's dovish stance, with projections for OCR to fall to 2.5% by year-end, represents a long-term headwind for the NZD. Should New Zealand's manufacturing PMI disappoint, or if the rally struggles to decisively clear the 0.5973 resistance zone, we could see sellers entering the market. In such a case, a drop back towards the 0.5850 support zone is plausible, and a break below the 0.5920 minor support would confirm increased bearish bets. For the long term, the outlook remains more nuanced. While USD weakness might provide an initial boost, the RBNZ's aggressive rate-cutting path could eventually outweigh this, especially if the global economy faces further challenges. Important price levels to watch are the immediate resistance around 0.5973, which, if breached convincingly, opens the path towards 0.6050. On the downside, 0.5920 acts as minor support, followed by the stronger support zone around 0.5850. A sustained break below 0.5850 would signal a significant bearish reversal. The likelihood of NZDUSD reaching 0.6050 in the short term is moderate to high, probably around 60%, given the current US dollar sentiment and technical breakout, reinforced by any positive NZ data. Conversely, a retest of 0.5850 has a moderate likelihood, around 40%, particularly if US data surprises on the upside or RBNZ dovishness gains more market traction. Traders should closely monitor the Federal Reserve's policy meeting next week and all upcoming U.S. economic data, including the PPI, CPI, jobless claims, and Michigan consumer sentiment reports. Also, pay attention to the Business NZ Manufacturing PMI for August, as it could provide crucial insights into New Zealand's economic health and further influence the Kiwi's short-term direction. Always remember to manage your risk effectively and consider both fundamental and technical indicators before making any trading decisions.